Oil prices hit over $110 a barrel today because the EU officially cut off Russian oil. Okay. And so in the next 6 months, they are going to cut off crude imports from Russia, which is about 2.2 million barrels a day. And there's no other nobody has the spare capacity to replace this Russian oil. Okay. And so Biden has a plan, which is green, and it's not working, but he's not going to tell you it's not working because it's going to make him look really bad. So I feel sorry for the guys that can't afford these high energy prices. In summer, I mean, we have yet to even see what high energy prices are, because in summer we drive more, we need more oil. Okay. And so I've got JP Morgan Chase video here. And if what he says doesn't shock you, then you need to wake up.
The energy space, JP Morgan forecast has 20% gap between supply and demand in the broader energy space. We're forecasting that it would take up to $1.7 trillion of incremental capex to close that gap. Again, significant asymmetry risks to the upside. If we see a complete shutdown of Russian oil, and we do think we'll see a sixth round of sanctions released in the next couple of weeks, that drives oil to 185 based upon our forecasts. There's significantly greater sensitivity now given the lack of slack in the system.
What he's saying is the oil markets are tight. We're losing Russian oil, and there's a 20% supply gap between production and demand. And we need to, in order to get back to where we should be, we need to spend 1.7 trillion. Now, here's the deal. It's going to take years to spend 1.7 trillion to develop. Okay. In addition, our fields are declining. Guys, we're in a mess here. And for good reason, this guy Sullivan for JP Morgan Chase is believing that we are going to see $185 oil. Now, you're not hearing that right now, okay? Because right now, China's demand has dropped by 1 million barrels a day. You've got, we haven't yet headed into summer. There's a lot of soft economies right now due to lockdowns, due to concern of what is happening right now. But come summertime, China is going to start removing lockdowns. And as China comes out of their lockdowns and as the world turns, we're not going to have enough oil, guys, and it's going to be a bloodbath. And so JP Morgan is expecting $185 oil. Goldman Sachs is saying $135 by second quarter. Right now, oil prices hit $110 a barrel, quite simply because Europe is banning Russian crude. Okay. And so if you look here, WTI crude right now is $107 a barrel. Brent crude is $110. Now, if you don't know the difference between Brent crude and WTI crude, WTI stands for West Texas Intermediate. If you sold a barrel of oil in a field in Oklahoma or Kansas or Texas, and you sell it directly to a local refinery, that's what you're going to get, WTI crude. Now, Brent crude is more exporting oil, okay? And when somebody imports oil, that's the Brent crude price. You're going to put it on a ship, and you're going to ship it all the way to Europe or wherever, probably a lot to Europe now. Oil rallies as EU officially proposes embargo on Russian imports. The European Commission on Wednesday officially proposed a full ban on Russian crude and oil product imports by the end of the year, a move that sent oil rallying more than 4% in early trade. Now, hadn't China demand, I mean, right now, if you look at China's, sorry, I was going to tell you, Russian oil embargo represents 2.2 million barrels a day of crude oil and 1.2 million barrels a day of petroleum, the byproducts of oil. Now, China's oil demand in April likely will reflect impact of pandemic lockdowns. If you look here, the IEA, Information Energy Administration, has revised its demand forecast for the country down by 925,000 barrels per day in April, owing to the impact of COVID-19 lockdowns. Now, here's the deal. We are losing a lot of oil with Russia, but China's loss is offsetting Russian oil, as well as we're releasing 1 million barrels a day from the Strategic Petroleum Reserve. Now, when the lockdown ends for China and we stop, and we can't keep producing oil from our Strategic Petroleum Reserves. I mean, we burn over 100 million barrels a day. We're going to get rid of all of our reserves, and oil prices go up to $300 a barrel. So we got to replace that oil. And so this release is only going to last for 6 months. In 6 months, we're going to lose Russian oil, all of it. And China is going to be back to business, and we're not going to have any more oil to release from our Strategic Petroleum Reserves. What do you think is going to happen to oil prices? I mean, it's a bloodbath out there, guys. I feel sorry for the people that can't afford these gas prices. Oil prices drop on unexpected crude inventory build. I mean, of course. I mean, we've lost 1 million barrels a day for Chinese demand. We're pumping a bunch of oil from our Strategic Petroleum Reserves, and in addition to that, we haven't yet cut off Russian oil. It was just today, it just became official. Okay, so we have excess oil in the market. Okay, but all of that, but it's very tight right now. I mean, it's not that much. I mean, we're declining. If you look here, global oil inventories have decreased for the last 14 consecutive months. So the last 14 consecutive months, stocks have been falling as far as oil petroleum stocks, okay, which means that the oil markets are tight. Severe new lockdown measures amid surging COVID cases in China have led to a downward revision in our expectations for global oil demand second quarter 2022 and for the year as a whole. Weaker than expected demand in OECD countries at the start of the year added to the decline. So bottom line, China demand dropped quite simply because of the COVID lockdowns. In these other OECD, they're a lot more strict when it comes to COVID. But the COVID doesn't last forever. These lockdowns don't last forever. And we're pumping a lot of oil right now. And so this is offsetting the Russian oil embargo. And oil is at $110 a barrel. Can you believe it? What's going to happen when the markets tighten even more and China comes back in full swing? I mean, I think everyone sees where this, and this is why JP Morgan is expecting $185 oil. Don't expect OPEC Plus to boost production in June. The group, according to Reuters, expects sanctions to cause a further decline in Russian oil output, perhaps not fully offsetting potential demand declines coming out of China due to COVID lockdowns. Addressing the OPEC JTC, OPEC Secretary-General Mohammad noted that it was not possible to fill the gap left by dwindling Russian oil output. What is clear is that Russia's oil and other liquids exports of more than 7 million barrels a day cannot be made up from elsewhere. The spare capacity just does not exist, he said, according to the transcript of a speech seen by Reuters. Okay, and so here's the deal, guys. We can't replace Russian oil. And the Biden administration is buying time right now. This whole Green New Deal, it blew up in their faces. You just can't replace fossil fuels. Okay, and so then Biden had to go begging OPEC to produce more oil. OPEC snubbed them, didn't even listen, and they're not increasing their output. OPEC is only interested in balancing the market so they could be profitable, so they can make a lot of money. That's all they care about. They don't care about you spending more money for gas. Biden cares about that because that's his base. That's who voted him in. So now all of his voters are pissed at him. And so here's the deal. Biden's trying to buy some time. He has zero solution. He is in a corner right now. He's not going to come out and say, hey, listen, we screwed up big time. Trump was right. I was wrong. Green can't save the day. He's trying to buy some time by dumping 1 million barrels a day from the Strategic Petroleum Reserve. And he's also taking advantage of the situation in Ukraine and blaming it on them. But at the end of the day, we didn't have $110 oil under Trump. It was $55 a barrel. Why? Because we were spending billions of dollars on developing shale. He was pro-American oil. He was he removed all the red tape. I think I just read an article about how South Dakota, because of new laws, new sanctions on oil companies that Biden is putting on them, they're going to lose 500,000 barrels a day. I mean, this is insane, guys. I mean, how are we going to function under an administration that doesn't get the fact that we need oil? Okay. And so people still think, I mean, you talk to the mass majority. Okay. I mean, you're in the know because you watch YouTube videos like this and you're reading the news with me. But most people are under the impression that, oh, we've got plenty of oil, and Chevron and these major oil companies, all they have to do is just start drilling. Look, we have a supply gap here. And just like JP Morgan Chase said, we need to spend 1.7 trillion to get back to where we were. That's not happening, guys, because people think that we're going to be okay. They think green technology is going to save the day. And they think, oh, well, this is only going to last for a short period of time. Recession's going to come in and it's going to reduce the demand. China lockdowns, it's reducing the demand. Oh, we're going to replace Russian oil. No big deal. Listen, guys, that ain't going to happen. Demand for oil is growing. And it doesn't make sense for oil demand to grow considering what's happening, but it is. I mean, everything you see is affected by oil. I mean, every time you get a package delivered to you, it's in plastic, byproduct of oil. They had to burn gasoline to get the product here. I mean, everything is affected by oil. We are burning 100 million barrels a day, and people are buying more plastic every single day. People are driving every single day. Yes, there is news that seems pretty negative, but we're still driving everywhere. I mean, my daughter drove today. My wife drove somewhere today. I had to pick up my boys from school. I drove to the store today. I bought my normal amount of groceries today. I bought my normal amount of electronics today. I'm spending money the same way I did back in 2019. Guys, I see the writing on the wall unless something major happens in the green tech world or we make a massive discovery in oil. And even if we did, it's going to take years to develop the field and to get us to the levels that we need to be. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe. If you're interested in investing in oil and gas, go into the description below. There's a link to fill out a form, or my phone number is down there as well. Give me a call. I would love to chat with you. All right, guys, thanks.